all of us in this room are self-employed. So you can probably relate to this section. You're probably really anxious to know how this is going to affect you specifically. But definitely in our clients, I know I encounter in Vancouver a lot of self-employed people. And up until now, there has been a program called the Stated Income Program. Now it's exactly that. You're stating your income. And the reason that they have this is because in businesses, if you're a mechanic, you're getting a lot of cash jobs. Like us, we write off our cards, our cell phones, even part of our homes and our rents and our mortgage amounts. So because of that, banks and lenders, the insurers even, they understand there's a bit of a fuzzy gray area. What exactly are you making at the end of the day? Because you have all of these write-offs. So what they've done is they've implemented a program called the Stated Income Program, and they've had this for quite some time. With this, your traditional income verification is not necessary. You don't have to show your T4s. What you're simply doing is just saying, I make $60,000 a year, or whatever seems reasonable. Now with this, it isn't that good to be true, because you are going to have higher premiums with this, which of course is more costs. And you can't just say that you sell coins or you collect bottle caps and you make $100,000 a year. It does have to be reasonable. And how do they deem reasonable? Well, there's various amount of things, which kind of leads me into where the changes are. Before, they were a lot more lenient on what was deemed reasonable. Now they're really focusing on different websites and economic studies, and they're going to ask you first, what do you think you make? And then they're going to look at what their stats tell them, and if that seems to fall within their realm, they will deem it reasonable and they will accept it. Now the other change, and again this is only for the Stated Income Program, the down payment amount has changed. It used to be that you could just put down 5%. It is now going to be a minimum of a 10% down payment. It's not to say if you're self-employed, you're automatically having to pay 10%. It's only if you decide to use the Stated Income Program. And with that being said, proving your income is always going to obviously stand up stronger with the lenders. So if you are able to, if you're properly declaring how much you make, you're paying taxes on that, keeping in mind if you are self-employed, whatever it shows on your line 150 on your tax returns, you actually get to add 15% of that back to account for write-offs. So if you're able to use proven income instead of stated income, you'll save on your premiums, be able to put a lower down payment down if you like. And as well, like Rowan mentioned, each insurer is a little bit different. And so their internal policies are varying depending on the amount of years you've been in the industry, as well as the amount of years that you've actually been in your own business. So that again is where you're going to have to ask your mortgage broker to let you know, I've got this client, they've been in the industry for 2 years, or maybe they've been in their own business for 25 years. That is going to depend, or we're going to have to then look at the different insurers, and we can send it to one insurer, but we can't send it to another. So they do have differences of opinions on that. So this is actually a really short and sweet presentation. So again, at this point I will actually stop. Does anyone have questions on the self-employed program or anything that we've covered up until now? All right, so first thing on your to-do list is definitely knowing your mortgage broker. It's not, especially for the realtors in the room, you're spending all of this time with your clients, and to just say, go to your bank, and take care of it on your own. Not what I would encourage, because with the banks, they have very tight regulations. They also, they're out to make as much of an interest rate as possible, so maybe your client won't qualify for as much, or whatever the case may be. We're actually able to handhold your client and ensure that it's getting done. Plus, we're able to call you, and we can kind of tag team with you on the client to make sure that they're getting us the paperwork that we need in a certain amount of time. Make sure that you hit your subject removal deadlines on time. Now, full disclosure of income and sources. This is more for clients. For those of you who are getting a mortgage yourself, you have to fully disclose not just what you make, but where the sources are coming from. There is, again, a lot of gray area in terms of income, and so if you think you make $80,000 a year, because that's what you made last year, it might not be. You may only make $60,000 because of a 2-year average, or based on your commissions and bonuses that aren't going to qualify, or things of that nature. So you need to not just disclose your income, but always your sources. And prepare your documents early. If you go into the bank and ask for pre-approval, which is actually the next point on here, getting pre-approved, You go into your bank and they'll say, well, how much do you make? Do you have any other payments? Are they taking things for face value? And they're basically saying, well, based on what you tell us, if all that is true, then you qualify for X amount. If you go to a mortgage broker, then they're not only going to ask you those questions and take you for face value, but then they're going to follow up on you and say, okay, let's start getting that paperwork together. And essentially what they're doing is they're going through the full approval process for you, so that when you, as a realtor, take your client, or as a client, you find that home of your dreams, and then you go to get approved, and you realize, well, I thought I made this much, or, oh, I thought I could get my paperwork together, or I thought I had this down payment. You mean I can't use my credit card for my down payment, or whatever the case may be? You're not going to have that disappointment of losing a property. So get your documents before even looking at properties. You know, get everything in order. And then again, confirming the pre-approval with the appropriate paperwork. The mortgage broker should go all through that for you. If you're unsure what paperwork you are going to need, ask, and they will definitely let you know. So with that being said, is there any questions? Because we're there. We've gone through all of the requirements. Yes?
Are you still giving out 120 days guarantee on the rate?
It depends on the lender. Some of them are 60, some are 90, some are 120. It's all internal policy. And so yeah, depending on what the rate is, your broker can let you know at that time what the rate hold is. That's something to note as well. If you want to get pre-approved, a lot of us brokers in the room here, we can do that on the phone for you. We can give you just a pre-approval of an amount. But if you want to get an actual rate hold, you need to let us know, because that actually takes a bit more of a process to go through. We have to start actually choosing which lender you're going to go with and pre-approve you and give you that rate hold of 90 or 120 days. But a general pre-approval, we can tell you a number to get going, but it's different than a rate lock. Any other questions? You guys are all awesome. You know what you're talking about now? All right, well, I guess, Wayne, do you want to close this up?
Sure. The final thing I wanted to say, I guess, is for the realtors out here, or people who are sending their clients to the bank or anything, to plug the mortgage brokerage industry with these new financing rules and things like that, you really should have a broker as a first choice, but definitely a broker as a second choice, just as a second opinion. The reason is we went through it. We didn't want to make this too technical, but as we showed in an earlier slide, there was 3 insurance companies. But realistically, not all the banks use all 3. For example, very few lending institutions use AIG. I mean, they're probably going to be disappearing off the map. So when you need, say, a basement suite income or a self-employed program, there are variances from not only the institutional internal guidelines, but also with the insurance companies. So, for example, I'll give you a classic example. Scotiabank does use Genworth, and Genworth does do illegal basement suites, which is great for Vancouver. But Scotiabank does not. So if you send your client to Scotiabank, that's their home bank, and they want to purchase something, they're going to qualify them basically only on their income without any rental income. So you would want, if they want to buy something a little bit more expensive, you want a second opinion. And that's where, as a broker, that's where we come in, because we can mix and match between the insurers and the lenders. We know what each one does. We could, in a sense, get them a little bit more money to get into that dream home in Vancouver, rather than, say, moving out to Burnaby, which is not a bad thing. Okay. So I mean, I think that I would encourage you, use a broker to begin with, because there's 40, 50 different lenders, and there's all mix and match. But more importantly, if the client says that, oh, I've been to see my bank, this is what they qualified me for, but it doesn't line up with what their expectations is, at least give one of the brokers in this room a call, get a second opinion. We may be able to get them that little bit extra to get them into the home that they want. Okay. Other than that, we will be around if you have any further questions. And thank you all for coming, and best of luck in the spring market.